That was quick. We're live. Yes. Hey, welcome. Jack Kelly Live. Happy and succeeding in the future of work. And today I'm really super excited to have Wayne Hu coming on, who's a venture capitalist. So anybody who spent time online recently have seen VCs, venture capitalists, talking about the companies they've built, all of these kind of cool innovations. And I thought it'd be great to have somebody who's a partner at SignalFire, who's a venture capitalist, who kind of is in the trenches doing this thing to understand what it's all about. So without further ado, Wayne, how about you could just introduce yourself and talk a little bit about, what you do as a VC?
Yeah, happy to. I'm Wayne. I've been a VC for about a decade now. I actually got my start at Kleiner Perkins, which was one of the more storied venture franchises out there. And I had one of these sort of canonical venture experiences where I was given an office and a desk, and kind of expected to kind of come back to the team with something. And that was sort of I think a pretty typical kind of lone wolf experience in venture capital. It's that a lot of folks find surprising about VC. And I actually ended up going back to Google, joining the mothership there, kind of whipsawing the other direction to be part of a team before I got the call up from Chris Farmer, who started SignalFire, the current firm I'm at right now, which is very much kind of a hybrid venture fund that's actually structured like a tech company. So it kind of gave me the opportunity to marry both sides, the best of both worlds of, that team-based environment of being an operator, as well as the amazing part of VC, which is the ability to ramp up infinite learning curves over and over and learn from amazing founders. And so that's kind of my journey, what brought me into kind of this specific, I guess, part of venture. And I've been at SignalFire for, I guess, the last 7 years now. It's been my dream job ever since.
What's surprising when you mentioned, so you go into Kleiner Perkins, right, one of the godfathers, right, of the whole VC ecosystem. And then what, they give you a desk and a phone and a computer, go, okay, get some deals. I'm shocked. I didn't know that it works that way, that it's so entrepreneurial.
It is very, I think the number one surprise most people have when they come into venture and work in the job is just how lonely it is. And I don't necessarily mean lonely as in you don't talk to people. Like you're not like, you're just in a vacuum kind of pontificating on ideas. That's actually not usually how it works. But it's lonely in the sense that you're spending a lot of time trying to speaking to and trying to speak with strangers, as opposed to working with your team, right? You're out there, if you're an operating company, you're spending most of the day talking to your manager, your subordinates or whatever, working together on kind of a group project. But in venture, it is very individual how you kind of go about sourcing deals, diligencing them, and ultimately creating an investment recommendation for your partnership. So that, that part of it, I think is pretty surprising. And this is not to pick on Kleiner Perkins in any way. I think I'm actually really grateful. I learned a ton from some really smart people there, but I think that's just traditionally how venture is done. It's very, very individual in nature.
Yeah. And how do you track down deals? So you're a young guy, right? You're in your office, you're all excited, you're pumped up, everybody's like, hey, what are you working on, Wayne? What's going on? And you're like, I don't know. I'm trying to figure this out. Like, do you network? Do you cold call companies that you think are, cool, that could, ultimately go public? How does it work?
Yeah, everybody has a different strategy here.
Mm-hmm.
I would say there's a few playbooks. I chose to zag a little bit by, I built a very basic web scraper at the time and tried to ingest company information, like, who they're hiring, how fast they're hiring, what could I infer about the pace of that hiring, about like the company stage and how fast they're growing. And that was something that I would just do for a few select companies to try to kind of narrow the universe to a list that I could just like try to get in front of. And I think that's some form of that has become fairly common, where all sorts of firms are looking at PitchBook data or CrunchBook data or credit card data or whatever it is, and using that as a filtering mechanism to get to kind of a target list, a lead list of sorts, and then just pounding the phones, trying to kind of get in touch with those founders and try to start building relationships. So that's at the growth stage, in particular, I think that's a very common playbook. And then as you move kind of earlier stage, I think the conventional playbook at least tends to be a little bit more individual relationship driven. Folks who maybe it's you came from the Google or Facebook mafia, and you're just in touch with a lot of people who, very smart people who are leaving those organizations, starting companies, or what have you, or maybe you're part of the YC mafia. So I think that that tends to be.
Yeah, wait, that's interesting. When
Yeah.
you say the YC mafia, is that kind of a bad thing now? Because have you seen, was it Ryan Breslow from Bolt, kind of just lambasting that? Is that a thing, or you just threw that term out there, not really meaning to have?
Oh yeah, that wasn't to pick on YC in any
Yeah.
way. I think YC is one of these interesting cases where everybody complains, like on the investor side. That is because they've set up kind of these perfect auction dynamics for their companies to raise at maximum prices. And I think a lot of people complain because, of course, it's just a hyper competitive environment and a very rushed process, right? But that said, investors kind of, they keep coming back over and over because everybody knows that, there's going to be great companies that graduate from YC. So they definitely have a network effect, a really strong network effect going on there.
That, because you see that in other areas too, because you could have a restaurant that has great food but horrible service, and every time you leave you're like, I'm never going back there, it's such horrible service. But then you're like, well, the food is really good. Yeah, and then you come back. So I guess that's what happens if the company or the restaurant really could deliver. Yeah, I guess you put up with it, you keep coming back, and that's what happens. But how is it for your own portfolio now that you're a partner, you're kind of, I imagine you have a name recognition, you have a wealth of networking of people that you can get in touch with. What do you have now? What type of companies do you look for? And are there any particular companies in your portfolio that you'd love to share with people and say, hey, here's something really cool. Here's a company that, I think people may not have heard of, but be really interested in learning about.
Yeah. One of our companies, I think if you are parents of young children, you may have heard of this company. It's called ClassDojo. I think they're in one classroom at least in at least I think it's 90% of all U.S. schools at this point. So amazing penetration and usage. And they have a fascinating origin story where it started off very much as sort of a behavioral management platform where every student gets assigned kind of an avatar. And instead of that's meant to basically bring online this behavior of the STAR system, which you may be familiar with, of monitoring kids in school, where if you goof off, the teacher writes your name on the chalkboard. But of course, having an avatar is in some ways kind of much more consistent with kids' behavior these days, and there's some level of permanence to it, where it's not like you just erase somebody's name. You can actually tally up points and earn points that you can use to up level your avatar over time. And it was actually, I think, prescient in many ways, given that we're, there's so much talk these days about sort of avatar-centric metaverse. But they got a lot of organic adoption across classrooms, and they have a really interesting wedge to building a metaverse type, a Roblox type kind of platform, where you could tie a lot of these gaming experience and learning experiences to the actual school social graph, right? Because they actually know who's in these classrooms and the real identity of teachers and parents, and then you have somebody there to actually moderate a healthy learning environment, versus Roblox, which is much more kind of the wild west, and much more kind of prone to abuse. So that's one that I think is really interesting and in an exciting place to kind of take advantage of some of the big macro trends that are top of mind for people, but in a really healthy way.
So interesting. So if, let's say, my kids are a little older now, they're like 20, 21, but let's say if I had kids, Christine's, nephew is at the age that I think he uses that. So what they have it in the classroom. So you have a laptop and you'll go onto a website. Now, do you need the goggle, the Oculus, or no? You could just go in and you see kind of a 3D-ish, virtual reality. You put on your avatar and then you engage in schoolwork. And like you said, you get stars or you get whatever kind of rewards for doing well in math or spelling or what have you. Is that how it plays out?
Yeah, that could very well be. I think it's not. That's a pretty reasonable articulation of what might happen in the future. Today, a lot of today it basically works with existing classroom technology, whatever we have, whatever is in the classroom. Could be iPads, could be the teacher's computer, what have you. But that's the way that they are kind of bringing the classroom online, if you will, where now you don't have to, if you're a parent, you don't have to wait 6 months for the next parent-teacher conference to actually like talk to your teacher about what's going on in the classroom and how your kids behaving. You can actually get a little bit of a real-time feed of these are the projects that are happening right now. It's typically like a lot of mobile photos and so forth that are shared, and you can see from your child's account if they got demerits or points knocked off for misbehaving, or or points for doing a great job in the classroom. So I think that's what's made it very easy and seamless today. Yeah. But I do think, to your point, one day it could potentially transition into whatever form that technology takes, whether it's smart glasses that you're wearing on your face, or a fully immersive VR headset. And I think the avatar and the mechanics of how this behavior management system works will it'll be just as relevant in that construct.
And why the avatar? What does that serve a certain purpose instead of just having yourself being on there?
Yeah. In some ways, it's well, look, for when you think about avatars and the allure of them, it really is. I think at the end of the day, the behavior is playing make-believe, right? And we do it in a number of constructs. Adults sometimes do it for cosplay or Halloween or things like that. Kids do it all the time, and I think they're still playing with at their age, they're still playing with kind of like notions of identity. And so I think the notion of having an avatar that you can level up over time is very natural for kids, perhaps even more so than having your real identity online, which it's your real face or what have you. That's, for a kid, maybe that's actually higher friction and more intimidating than especially if you're still kind of trying to find yourself and experiment with who you really are. In some ways, like the embodiment, the creativity of being able to embody an avatar is really attractive, and it's also it also kind of masks. It lets you kind of be who you want to be, if you will, as opposed to being attached to kind of your real life face and so forth.
It makes a lot of sense. We've been experimenting with different VR platforms, metaverse platforms, and doing LinkedIn Lives. And I was kind of debating to ask you if you wanted to do it, but I figured, all right, you know what, let's just have a conversation, not have one extra level of friction. And personally, I feel more comfortable having that avatar and being in virtual reality. It's almost like if you're an actor, I don't know if Tom Cruise, that's his real name or not, but like, actors may change their name. You have a nom de plume if you're a writer, Mark Twain. And it almost kind of frees you up to really be your true self, but you're not burdened with the baggage of who you are, your past and your experience and what people perceive you. So you come in there, I think, with that mask on, with an avatar, as almost like your true self, but without having to worry about all the other stuff. And I think it makes people, and also we're having a conversation now through Zoom. I would think, and I'll be very frank, and I think most people feel this way. You think, okay, how's my background? How's my lighting? Do I have dirt on my shirt? And it on, so that it takes you out of the moment because you're now focusing on other things. Or I'm looking at your background. Hey, what is that? What's over there? And I guess if you have that avatar, especially for a young person, it just takes everything away, and you can just do whatever you're doing.
Yeah. So it's pretty common. I know a lot of people who hate the sound of their own voice. I'm definitely one of those people. And I think it's doubly or triply true for
Can,
like your
can
own
we break
face.
down the fourth wall? Let me interrupt you because Christy, a producer, she's on with these, and that's what she says every time. And I say, "No, you sound great," and she's like, "No, I feel uncomfortable."
Mhm.
Hearing it. So that's a common thing, right? It's
Very common. And I think,
yeah,
it's even more true for putting your face in front of a camera,
yeah,
And so to your point, I think abstracting away from that a bit relieves that pressure, with an avatar. And I guess the flip side of it is there's probably a lot of people who feel more like themselves if they could portray something different rather than their, the whatever physical appearance they have,
absolutely.
and like a lot of people who may not feel comfortable, in their own body or with their own faces. And so I imagine there's actually a segment of people for whom, this is really interesting and potentially like an enabler of really expressing yourself in a much more authentic way, which is maybe the opposite of what people might assume.
The first reaction I had to avatars was, well, wait, that's why I, couldn't put it together. But then when I did, yeah, I agree with what you're saying. It just frees you up, and it's kind of liberating a little bit, and it's wild. So I spoke with Arthur. I can't recall his last name, from Somnium Space, and I interviewed going to his metaverse, and he had this almost skin tight black outfit, kind of Batman-esque, and like a lizard face, but then every once in a while, it'd be kind of this helmet. And it's so wild, but he feels so you can tell he's like in his zone. He
Mhm.
is like the truest form of himself. You can just feel it in that garb. He's transcended who in real life he is, to probably what he really is, getting into his NFT automobile, which I think he did, by the way, have his, I think he had the price tag on it to show up, but I couldn't really catch it. It looked pretty expensive. So, yeah, it's such an interesting area. Are there other portfolio companies that also have kind of this futuristic, kind of feel to it, of like of that you're working on now? Do you have, or you're looking to acquire a company?
Yeah, we have another company called Green Park, which will be making a number of really high profile announcements soon with various leagues on the sports side. But if you can imagine, one of the areas where you see a lot of people playing make believe or dress up today is in sports, right? People at tailgates are like donning like the
Yeah.
massive, the hats and
Yeah,
the costumes and like
like a
the
cheese head, right? With
embodying,
like the
yeah, yeah,
cheese block of cheese. Yeah.
exactly, embodying like the mascots and so forth of their respective team. And the depth of that sports fandom is incredibly passionate.
Yeah.
So that's an area where I think there is a lot of room to maybe digitize that behavior and create a space online for people to have those sort of tailgates and be able to kind of like put on the uniforms and trash, maybe trash talk each other a little bit
That's
in a healthy
wow.
way.
And would you collectively be watching a game? So let's say you're Green Bay Cheesehead, you have that block of cheese on your hat, and you're tailgating. Would you have like a group of your friends just all watching the game together in virtual reality? How would that work?
That could be one way it
Yeah.
manifests. Look, I think there's a question of what's possible today and then what's sort
Right.
of the aspirational view. And I think you have to figure out how to hold people's hands and kind of like walk them to that long-term, vision. So I think, a lot of what happens today might need to be, more kind of like mobile experience with sort of an element of that metaverse type world. But in the future, for sure, you can imagine, people instead of just being at home kind of on your WhatsApp group with your sports fan kind of group, trash talking each other as you're watching the game, you can imagine kind of being there like a house party, watching it with your friends and being able to kind of like, being able to, I don't know, like throw popcorn at
Yeah.
the, in the stadium, the virtual stadium, or do the mini games. If you ever go to any of these league games, they always have in the commercial breaks. There's always sort of like mini games and things to keep people engaged. You can imagine a digital version of that, where now you're not watching the commercials anymore, but you're trying to catch the virtual T-shirt,
Oh,
the
that would
virtual
be
NFT
awesome.
speakers that are being flung in the air out
Or
of the
you
cannon.
get on the basketball court and you get to hit some
Yeah,
3-point shots or something
that's
while
right.
the
Yeah, yeah,
commercial is going on.
yeah, that's right.
So so wait, is it like that the technology is good, but not where it all has to be. So I feel like what you're saying is might take several years to get to where you would feel like, wow, okay, we could put into place a lot of things we're talking about, and even more so. But right now, there's only a certain amount you can do for the time
Mhm.
being, but
Yeah.
eventually it's going to scale up.
Yeah, I think that's right. I have a hard time believing we're going to have fully immersive metaverse experiences of the type that we all kind of
Yeah.
consider to be true metaverse in the next 5 years or so. I just think everything from the display, the optics, um, the all of that stuff, the motion photon latency, everything is still just a little bit of ways away for this to be like a frictionless way to kind of plug in and feel like you're really there with everybody you know. I think that's we still got a little bit of ways to go there. I think we're making some encouraging steps in the right direction for sure. I think the latest numbers from the Oculus headset sales were a bit surprising to me on the upside. So we now I think Oculus will never publish the underlying engagement numbers. That's probably more important.
Interesting.
But
Well, that's telling that they're not giving those numbers, isn't it?
yeah, it's probably telling. I would say, and there was actually a poll done by, I forget who. Somebody recently did a poll for kids, I think, of their level of engagement with Oculus, and it was alarmingly low. So I still think we have a ways to go.
But that makes sense because, I wear glasses and you put it on, and I have now little kids probably won't have like the progressives, most likely. And it's odd. So you're putting it on, so you have your glasses, then the Oculus on top of that, and then you're trying to look. So if I'm having a little difficulty, I can imagine a young child just like having this, big bulky thing put on there when they're not used to it. But then again, people get acclimated really quickly to things.
Yeah,
after a while, you get used to it, especially if it's a game or something you're really into. Then all of a sudden you'll figure out a way to do it and be happy with it.
Totally. I think there's a little bit of the chicken and egg, as you're saying. Like, once people build the behavior, I think we can get over the friction of learning how to integrate this in our daily lives pretty easily. But,
it's speaking with games. It seems to me a lot of, I don't want to say the action, but like, I'm not a techie, but I'm observing it from the outside. But observing it from the outside, it seems like there's, the cryptocurrency exchanges, there's the NFTs, you have gaming, you have earning money playing gaming like Axie Infinity. Are there other things that you see now where, there's a lot of innovation going on, a lot of new developments happening?
in tech broadly, beyond sort of metaverse and NFT. Oh, there's tons. It's interesting because I feel like the really sexy stuff is like in NFTs and metaverse and so forth. But you still have industries that are just being reinvented end to end with software. So many manual processes out there on, one of our companies is in the personal injury space, for example, super manual, how underwriting gets done there, for figuring out like what are the settlement amounts for car injury victims and so forth. There's just so many different.
It's so weird. It's so wild you're saying that, Wayne, because one of the reasons the many reasons I was excited to talk with you again, it does strike me from an outside observer that it's almost like the venture capitalists are trying to find what silo, what sleeve, what unique niche can be disrupted, and then pile a lot of money into it to own that space. So whether it's like personal injury, like who would think, like what normal person, you need to be a smart, brilliant person to say, personal injury, let's see how we can really put money into it and change it and disrupt it. But are you noticing, is that a trend? Like, is that kind of an open thing that people say, okay, hey, we have to find that one thing that hasn't been disrupted yet, and we're going to do it and put a lot of money into it and then own that space? Is that kind of how it works?
Yeah, I think there's definitely an element of kind of like trying to find kind of the diamond in the rough, if you will, that no one else is looking at. I would say it's not the only strategy for sure. I think there's a lot of VCs that there's continue to to invest in, I'm not going to say obvious, but consensus, tailwinds that are going to be huge, multi-decade.
Right.
Mental health, right? A huge area that I think a lot of folks continue to invest in. Consumerization of healthcare, data infrastructure, et cetera. There's so many different places where, you could argue we're at the very early innings of multi-decade, inflection points. And so, I think being active investors there, that's a completely valid strategy as well. But for sure, I think part of what gets me excited, at least, is trying to find these industries and applications that nobody else is like thinking of or researching, and figuring out if there's a way that you can actually transform it with technology.
Yeah, I would ask you that, but you don't want to give it away to everybody. So I probably shouldn't ask you, or do you want to share like some of these just big picture trends that you think might pay off in the long term, in the long run?
Yeah, I think if I were to answer it abstractly, if you just think about how much pen and paper and Excel is still out there, it's amazing how many industries, we're still just highly manual, whether it is on the everything from like construction side to like the healthcare side. There's just so many different so many different workflows that that you can make much more efficient. I think what is really interesting is when you can start to marry digitizing those workflows with data, where by virtue of owning that workflow, maybe you generate some proprietary data that becomes really valuable to you, right? That's what's really interesting in my mind. We a while ago we had backed a company which had worked with telecom companies and allowed their customers to basically do like a top off of their minutes. If you're thinking about emerging markets where you're buying a prepaid SIM card, right? You may have to once you deplete those minutes, you may have to go to the corner store and buy another prepaid SIM card. And they were allowing reducing churn for those telecom carriers by an order of magnitude by saying, don't potentially lose those customers, just have them top off their minutes. By virtue of owning that workflow, they were also generating credit history, because these customers, these users that nobody knew anything about, they didn't, these telecom carriers didn't even know the names of these people. They'd have to create an account, and they would be laddered up a credit repayment history for these microloans to actually buy these minutes. And in that process, they were generating kind of the credit history, for, if you will, for the billion unbanked people who live in countries that don't have a FICO score. So that kind of like stair stepping where, okay, it's not just about owning the workflow itself, but by virtue of doing that, maybe you actually own a piece of data that's really valuable in a non-speculative way, which allows you to kind of get into other businesses. I think that's really interesting. That's where you kind of go from just like, just a pure kind of dumb workflow kind of company to something potentially bigger.
That seems kind of one of the holy grails, because there's so many companies I've written about lately about data, and so many pitches I get all the time about data. So that seems to be one of the main things people just companies are so interested in and trying to kind of talk about. Also, when you mentioned about unbanked, it reminds me, because when we spoke last, we talked about Axie Infinity, and that, as I understand, that's kind of one of these play to earn games. So you play a video game, but you could earn money. And for people in the Philippines and other places that there's a lot of poor people, that this is a great way for them to make a lot of money. But then I heard that they got hacked. So maybe you could kind of, for people who aren't familiar with play to earn, and then unfortunately the hack, maybe you could kind of talk a little bit about like what that is, because that's another interesting kind of sector, right?
Yeah, it is. It's Axie Infinity it's a fascinating model where you have to buy an Axie to participate in the game. And Axies, they up until recently have cost a lot of money. But once you have an Axie, you can basically engage in kind of like, I want to call it, for your average listener, kind of like a Pokemon style battle against other teams of Axies. And if you win, you earn SLP, Smooth Love Potion, which is sort of the in-game currency.
This is one thing that this just blows my mind. Within the whole crypto, NFT, gaming, the terminology, it's like you have to learn a whole other language. It's bizarre. You have to kind of, when you sometimes I read something, I'm like trying to translate it into like normal talk, where it's just not a what was it, love, what is it called, smooth love,
We love SLP. Yeah, that's right. Yeah, and it's actually only one of three other currencies, because you have like a governance token, and then you've got anyways. So it actually gets fairly complex, but I think the basics is you're battling other players with these axes, which you can think of as kind of like Pokemons. And when you win, you get the in-game currency, which you can actually cash out, in DeFi. So you can.
See, that's another one, DeFi, decentralized finance, right?
Yeah. So you're gonna have to, you'd have to like convert it into, and then kind of like, and then you can convert it to fiat. But the point is, you can take your in-game currency and cash out in real money, whatever your fiat currency is, where you live. And so that's in some ways that's it's kind of like a next generation of gaming mechanics, which has allowed, I would say up until recently, allowed people in poor countries to earn well above minimum wage, sometimes multiples of what they could have earned, which is life-changing for so many people. Now, one of the downsides of this, of course, is it's the you may ask, like, where's the money coming from, right? Is this just like some giant Ponzi scheme?
Right.
And the money is actually coming from new players. That is what's pushing up the demand for the currency, and the demand for the axes, such that you can make money, right? And so that's kind of like where you could imagine the value coming from is this new player acquisition.
So
and when that dries
up, constantly need a flood of new people.
You need a flood of new people, and when that dries up, then you've got kind of you've got sort of downward pressure on the economy, and I believe that's happened recently. I think I remember seeing recently that there are periods where now what you can earn in the game is actually lower than minimum wage in a country like the Philippines. And so I think there's naturally going to be a lot of ups and downs for an economy that has kind of the structural design that they have. And then, of course, the other piece of this, which you touched on with the hack, is it's called a Web3 kind of decentralized game, but it's actually it is actually centralized in certain ways. They actually run their own blockchain called Ronin, which was hacked, right, because of a vulnerability. And that's something that, of course, most people are not going to have the means to audit somebody's blockchain, when they start joining the game.
Yeah.
And so that's, obviously, I think at this point it's been shown that it's pretty hard to hack, say, the Bitcoin or Ethereum chains, but if somebody's developing a de novo chain and running their game on top of that, not many people are actually going to bother to, look at the math, the code underlying it, and figure out if there's vulnerabilities there, and so that leaves players potentially open to having, I don't know, their life savings, their, these axes that they've invested tons of money in, potentially compromised, which is what happened. And the other thing that is also structural about this game that's challenging is, at the end of the day, Axie's incentive is to actually have a stable currency, because the currency is being used for something, right? It's really, really hard for you to kind of plan out your gameplay and so forth if the currency is just like whipsawing up and down. And so as a result, they actually have to centralize the supply of currency, just like the central bank would, right? And that is something that I think most people don't, a lot of people might not realize, is like, okay, well, this is a Web3 company. They, it's the token is completely decentralized or what have you, but the monetary supply is actually not. And it's not because of, the company Sky Mavis being evil. It's because they need to control it to, try to have some, try to have a little bit more control over a functioning in-game economy. So there's all sorts of kind of issues that, we're still kind of working through to figure out how do you make a game like this sustainable.
It's wild in the sense that when you reference it, hey, like Pokemon, So you think, okay, maybe it's kind of childish, but it's very sophisticated. And so much so, as I recall, is that before it kind of went on a downtrend, there's so much money to be made that you had to have bankers. So
Yes.
let's say, somebody, young kids wanted to start out playing, they wouldn't have enough money to pony up, like going to Atlantic City or Las Vegas to go to the table. So you would have to get folks with
Yeah.
deep pockets to support you. And then also coaches and managers, because you're dealing with a lot of money.
Mm-hmm. That's 100% right. Yeah, there's a very sophisticated ecosystem that's kind of cropped up to support that economy. Like you mentioned, you have people who are basically staking players, buying Axies for them and then lending it to them, and in exchange for some percentage of their winnings, just like staking poker players in Vegas, I suppose. And then you've got people whose job it is to identify, and recruit said players, train them, the player coaches.
Oh, wait. So maybe there's another career for me in recruiting. Instead of recruiting for like Wall Street folks, I could recruit for players for these games. I don't know. Is that a lucrative field or not?
I think one day it very well could be. Today, I would tell you it's a little bit of the wild, wild west. So you couldn't guarantee your income, so to speak. But one day I think, there may be enough games out there like Axie who figure this out, where, even if one, Axie, one virtual nation kind of gets hacked or shut down, you could always digitally migrate, to the next economy, so to speak, down the street and make a living there.
Is there another one that's kind of,
where
everyone's now saying, hey, I want to get in on the beginning, just like when you hear a new coin and everyone's, oh, I got to get on this one, or a new token, because they feel, okay, now I could get it on the cheap and take that right up. Is there another Axie Infinity that's out there that people are gravitating towards?
There was a lot of talk around Star Atlas. I'm sure there's others that are coming up too. It's still early days to know, but one day, yeah, it could be the case that you've got a number of these virtual nations that have their own GDP, and you're doing a little bit of the calculus, just like a potential immigrant family. And you're saying, okay, well, do we want to immigrate to America? Or do we want to immigrate to London or what have you? And if Brexit's going on in London, maybe we go to America.
So we go to Decentraland or go to Sandbox, or we go to whatever to be named later, kind of. So a whole alternate universe that you'll go to.
Yeah. That's right. And hopefully it might be less disruptive to like just move your whole family to another country in that kind of digital construct. We'll see.
In terms of, and if you're, I don't want to put you on the spot. It's probably not a good way to start a question, because oh no, what is he going to ask me? When I see some of these valuations of these companies, and they seem so high, and you don't really see a lot of the revenue. You don't see, profits. And this is from mature, startups, that have been around for a long time to kind of fairly new ones. And I don't want to call any company out because I don't want to make you feel uncomfortable, but what's the real deal? Are they overinflated? Are they real? If we hit a recession or some real turbulence that, like with Instacart, what they got 40% cut just overnight. Like, oh, imagine how wild is that? Just overnight up, we made a mistake. You're 40% worth less, but nothing really changed dramatically. How is that? Is this potentially? And again, dude, this is your livelihood, so I don't want to put you in a bad spot. So if you want to sidestep,
no, I'm happy. This is actually front and center in every VC's world right now.
Yeah. So what's the real deal? Like, what's going on?
Yeah. Look, I think there's a real risk. Of having I don't know, a sizable percentage of unicorn companies having to raise flat or down rounds at some point. In my opinion, I think no question we've had a period of easy money and lots of money piling, especially in the growth stages, pumping up the valuations of companies. And what you're seeing in the reason I say there could be a bit of a correction there is the mechanism for correcting markets on the private side is very different. So the public markets, you sort of see the market fall in real time. The private markets, you don't have market corrections in that way because there's no mark to market.
Right.
You're not pricing an Instacart or what have you real time based on investors. Those
But are there platforms where you can trade you know, on these private markets, on these private companies, or if they are, they're very thinly traded and it's not.
I would say, yeah, certainly not a meaningful portion of the
Okay.
trading volume of any of these any of these companies. And so most of these companies, they don't get marked to market until, call it 6, 9, 12 months after the public markets crash, right? And it's because these companies, they'll scrape a little bit of money from insiders. They will, they'll let a few people go. They'll shave costs, et cetera. They'll stretch out their runway a bit more, right? To delay the inevitable coming back to market raising money, where the multiples are going to be much lower. And so for a lot of those companies, you're going to have a period over the next, call it like 6 to 12 months, where we're going to kind of find out who's the emperor with no clothes, if you will. Eventually they're going to have to come back and, and raise kind of in a much more sober environment. But it's unless it's maybe Web3. Who knows what's going to happen with Web3? I feel like companies in Web3 are still getting insane valuations.
And then what if they can't raise? I guess they just get acquired, or maybe some just close their doors and that's it.
I think a lot of those companies are still, look, they're still great companies that just happen to kind of raise at valuations over their skis. And so they'll maybe just go through a bit of the painful taking of their medicine, where they raise flat rounds or down rounds. I think a lot of these are still fundable companies. I think for some of the companies maybe who have no revenue, or just the unit economics are upside down and somehow they got away with it. Those are the companies that I think are at huge risk of potentially imploding, especially if they're like in very capital intensive industries where there's still a lot of fundamental tech risk, for example. I can imagine seeing a lot of those headlines in the next 6 to 12 months. But if you're thinking about your fundamental kind of like high growth, high margin SaaS business, who just happen to raise at 100x, 200x revenue, those companies, there's still going to be a place for those companies. They just may have to retrade on their valuations a bit.
So if a company has a really strong business model, they have the ability to bring in revenue and profits. They may take a hit, but they could survive and keep going. It's the ones that maybe sound sexy and cool and awesome and get a lot of buzz, but there's not that much behind it. They may have some trouble moving forward.
Yeah.
And we're kind of seeing that, aren't we? Seeing this a lot in the tech space, the publicly traded tech space, right? Where you see a lot of the valuations starting to get compressed now, where there really isn't, wait a minute, with inflation raging, with maybe a recession coming near, maybe they're not, everyone got crazy during the pandemic because they were all home and nothing to do but buy stocks and trade stocks. All of a sudden, now it's coming down to some reality. So I guess the same thing would hold for the private markets with these
with a delayed time fuse.
Yeah.
I think so.
Is that what happens first? Usually you'll see with the public companies because they're traded, so you see it in real time happening.
Yeah, I think that's what happens. So yeah. So
in the VC world, a lot of people like kind of nervous and worry, like, crossing their fingers, hoping that everything goes okay, we get through this, or how do they like hedge against it?
Yeah, it's a little bit of mixed emotions. I would say I can speak for myself that I think some level of market correction is healthy, right? The level of competition, the level of money coming in, funding companies at any price, and the level of just how the sheer number of companies getting funded, such that any company is going to have like 6, 7, a dozen competitors immediately, all fighting for the same talent, if you will. I think it was probably getting a little unhealthy. And so I think, some level of market correction is probably good for the system as a whole. Now, I'm not so naive as to think that, there won't be bumps along the road if there's a market correction for, our portfolio, everybody's portfolio. No question that will happen for sure. But I'm hoping that, especially if the correction happens where it's like, it's like air being let out of the balloon, as opposed to like a super kind of dramatic crash at one point in time. I'm hoping that that will be a net positive.
Yeah, because we was kind of seeing that with the stock market, where it's like the air was coming out. We went into kind of, depending on what sector, it was a correction or bear market. But then all of a sudden it started kind of coming up again, which in a way, I would have almost wanted it to get the air out so you don't have to keep going up, and then it just gets a real savage drop, because that's when everybody panics. and
Hmm.
freaks out, because then you see those huge numbers of declines, and you turn on, CNBC, and everything is in red, literally, not just
Yep.
the, you're not just the ticker symbols, but like, you ever notice that to scare people, and then they get freaked out, like, I'm selling. It just becomes horrible. So like, I agree with you, having that air taken out gently, and then you could see, like you said, who are the ones who really, then you could kind of probably see, okay, these are the ones that are going to survive and thrive, and I'm going to bet on them. And here are the ones that it shows they're kind of on weak legs, maybe not so much.
Hmm. Yeah.
Now, wait, for people who are watching this, and as we have a great resignation. We have months of 4 million Americans quitting, where there's a war for talent, and with the pandemic, we've all seen people kind of just reevaluated their lives and careers. So if somebody wants to kind of pivot and maybe move into venture capital, or maybe let's say they're in a traditional Fortune 500 company, maybe they're working for a Credit Suisse or Deutsche Bank or JP Morgan or Citigroup, and they're like, maybe there's more to life than just doing that. Maybe, I want to try something cool and different, a cool fintech, an interesting startup.
Hmm.
Is that possible for people to kind of reinvent themselves and pivot in this space? And if it is, like, how hard is it to do that? And I know it's general, because everyone's gonna have different skills. You could be an accountant, you could be a lawyer, you
Mhm.
could be a software engineer, everything's different. But is it hard to enter to some of these, is the barrier to entry really high or not?
There's still a massive talent war for
Mhm.
very smart, kind of highly motivated people who can have a huge impact at startup companies. So I think it's look, there's as you mentioned, the pathway is going to be a little bit individual, but here's what I would share. Um, if you are a smart generalist working at a large company, um, and you're potentially interested in dipping your toes, I think there's just so many different ways you can get involved, right? There's so many companies that would love help in any way. One of the ways that I first started, dipping my toes in the startup world was just volunteering, kind of networking, finding really interesting folks who are building businesses and volunteering some of my time, to work with them. And that is what gave me a little bit more of the conviction that this is kind of where I want to take my career, and which helped build a little bit of the credibility for me to approach kind of the next hot new startup, if you will, and convince them that I wasn't just kind of a fair weather person kind of dipping my toes, but I was ready to make the jump. So I think that there are definitely ways that you can go about doing this. And I'm happy to share more about the specific things I would look for in a company if you're kind of like a smart generalist. But I saw you're about to say something, so happy to
Oh,
kind of talk quickly.
yeah. If you're kind of does that work if you're a younger person to do that and say, hey, I just graduated, maybe a year or two out of a really prestigious school, help out. But if you're like 30s or 40s or 50s, does that get weird and awkward and uncomfortable, or is that still possible?
You're right that it's definitely more common in the former.
Right.
The later you go, I think the more folks are going to ask, what caused you to sort of have this awakening,
Right.
right? If you're kind of like a lifer at a
Yeah.
Fortune
Yeah.
500 company, it infers something about your risk aversion, your risk tolerance, if you will, and the kind of environment, the level of structure you need to be productive. And so, I think part of what somebody would ask is, okay, well, we're a fast growing startup. It's super unstructured. It's very self-directed. It's very messy and chaotic. And there's a certain kind of person who's going to thrive here. Um, and I think it's in your best interest and the company's best interest to figure out, whether or not that's actually an environment you would thrive in. And I think that's why it behooves you, I think, to try to figure out ways to kind of put yourself in those
Right.
environments if you haven't before, to see what it's like. And and it doesn't necessarily have to be in a company, in a corporate setting, by the way, right? One can take risks in different ways as well, whether it's trying to build a business, like a little project on your own, hacking together a little project, trying to teach yourself, a little bit of code, trying to, hack together a side project on your own, or, taking a path less traveled in, in volunteering, for, this certainly happened for something that's a little bit more startup like, or, a tech company like. I think there's a number of ways that you can start to demonstrate that, that's the environment that you can thrive in. So, that's my feeling on that. And in general, I do think that there is such a huge demand for smart generalists who can thrive in that kind of environment, particularly around kind of like whatever you want to call it, Series A-ish, Series B-ish, where and you probably know this, when you look at these companies, they don't have any sort of C-suite. There's no CFO, there's no COO, there's no like CSO. It's like the founders and a bunch of developers. And that means by definition, the founders are doing all those things, right? They are the CFO, they are the chief strategy officer, the chief product officer, the chief blah, blah, blah. And as a result, there's a lot that you can, pick up and do to be high leverage to them. And then when you do that, you can grow alongside the company, where it's, it should be post product market fit at that stage. And then you can eventually slot yourself into a home where one day that company is going to be Series C, Series D, whatever, and they're going to be looking for the world's best specialist in every seat, right? Like somebody who on the operations side has been there, done that before, somebody on the finance side who's been a growth stage CFO before, right? And if you're a smart generalist, when a company gets that mature, you're not going to be at the front of the line for any of those roles, and you're probably going to come in fairly junior, right? But if you can get in kind of right before that actually happens, and potentially earn the right to take one of those seats, and show that you were smart enough, agile enough to actually build that expertise and learn it yourself, that's where I think people can kind of really propel themselves on their career much more quickly than they otherwise would. So that's a little bit of like the ideal scenario, the best case scenario, I think, if you're trying to get, trying to find yourself a seat on the rocket ship.
That's really helpful, because if I could distill it down, it sounds like a couple of tracks. One could be, let's say, and it doesn't have to be younger. I guess you just have to have that attitude of, I could put my ego aside and say, hey, I'll come there. What can I do to help? Or if you kind of did your research about the company and know where they need the help, say, hey, I do X, Y, and Z, and I think I could add some value to help. And this be at any age, but as you get older, it's harder. And then if you are a little bit older and you're in a more conservative kind of organization, you're going to have to really tell your story, how you could operate. And I see this as a recruiter when it goes to a startup where there is this bias. And I understand it. We're thinking, okay, you've been at Citigroup and JP Morgan for 10, 20 years. You're in your lane, you're that corporate. Can you deal with something that's messy and just on fire and everything's going nuts and everything's going wild every day and you got to juggle it, and you can't turn to you don't have a bench of 100 people in compliance, 100 people in legal, 100 people, in literally like, hundreds of people in HR. So you got to figure it all out. So you have to tell your story. Here's how even though I did that conservative route, I'm a risk taker in other things, because maybe I don't know, it's some skier going off the biggest mountains. I've done other things, so I can show, in other parts of my life, I'm take these risks. So it's really kind of getting in there and adding value. And then it sounds like if you get your foot in the door, particularly in a place that's kind of starting out, and you make yourself valuable as it grows, then you have a better chance of really kind of participating in that growth. And then I guess even if it doesn't work, what I notice with a lot of these kind of new companies compared to the more traditional ones, they're more okay with you working at a place, you're there for a while, like, okay, now I'm going to the next one and next one and next one, as opposed to like the more, the legacy corporations, it's kind of frowned upon to kind of keep moving. So It is right. Okay, you get there and okay, I got the experience. Now I can kind of leapfrog to the other one and so on, just keep moving. And now you're in that whole ecosystem. Yeah,
I think those are great summaries.
Cool. So before we go, because I don't want to take too much of your time, I really appreciate it. And I'm sorry if sometimes I ask these third grader questions, but I find out it's really helpful for myself and for the audience to really get it. Cause like you hear these things, you're not sure. And you know how people are. Sometimes they don't want to ask because they're embarrassed. They feel, oh, I should know it. So I have no qualms about asking these kind of questions. So this way you can really learn and everyone else can learn. So later today, when they're reading the Wall Street Journal or the New York Post business section, whatever, they could be like, oh, I got DeFi. Yeah, I just heard of that today. All right, I get what DeFi is. Oh, pay to earn. Oh, NFTs. Oh, I get it. And so they feel, oh, and that gives them more confidence that if they are interested, because a lot of people now, everybody's interested in like what the next job is, next opportunity, next business. So then they say, hey, let me check this out. And that, so someone who could be watching this now ends up getting a cool job from it. So this is so awesome. Before we go, any last minute things that maybe I didn't ask you or you like to share about what you do as maybe as an operator, as a business person, anything else you like to share?
No, I think no, your questions were awesome. I didn't think they were third grader level at all. Hopefully I answered them. And yeah, I say for aspiring entrepreneurs or people who are starting companies, check out SignalFire. I think we're doing some really awesome stuff as it relates to company building within the venture space and trying to do something very different. So
let's say hypothetically, there's a guy who has been an executive recruiter running a search firm for like 25 years, writes for Forbes, and they have a business. So I could kind of hypothetically reach out to someone like you and say, here's what I want to do. Now, what would you have to do? Have like a whole pitch deck, or how does that work? Or you just say, hey, here I am. Can we talk? And I don't mean just you personally, but just in general. How does that?
Yeah, the best way by far is getting a warm introduction.
Yeah.
I think that's unfortunately, that's just sort of the way that venture capital works, because there's just so much, just a flood of inbound kind of ideas and so forth that most venture capitalists just don't have the time, quite frankly, just to kind of sift through them. So that's just sort of a first filter. That said, if we do have a channel for inbound startups at signalfire.com over email. And we do have somebody who's trying their best to kind of look at everything there. And if you do that, I would just try to have a very targeted pitch on this is what we're doing. This is why we think it's a big opportunity, and this is why we have an unfair advantage.
Cool.
So
this is great, man.
Yeah.
Wait, you gave like a master class in what VC world is, about startups, NFTs, earn to play. What to do if you want to be entrepreneurial. So this is great. I think for the people watching it, this is exactly what they want to find out. Like they just want options and choices and to know what's out there. Because sometimes, especially when you don't know what's out there, you don't even know what to ask for. But then you hear things, you go, I'm going to do some more homework on it. I'm going to look more into it. I'm going to, check, I'm going to send a message to Wayne to SignalFire and see what's all going on over there or other places. And it opens up opportunities. And that's, to me, that's what's so awesome about doing these podcasts and also writing, is because it turns people on to things that they never thought, they could do or want to do or be interested in doing. They realize, wow, I could do this. This is fantastic. This is great. I'm so excited. This could be the new part of my life, this new post-pandemic, version of myself. And I think it's exhilarating. See, it's maybe weird way because we're still technically in a pandemic. We could be in a World War III, but I'm so excited about like what's going on because I speak to people like you every day. We're doing cool stuff, innovations, new tech, new apps, new platforms, and it doesn't get reported enough. On major media, and I enjoy bringing it out to people because there are great things happening, and it's really awesome. So I appreciate you taking the time and sharing your knowledge with everybody. And then hopefully it really impacts some folks. And hopefully I'll get some good success stories, because I hear back from people that I could always text you and say, oh my God, you're not gonna believe this. This woman heard about it and now look what she's doing. And it'll make our days when you hear that. So thank you very much for your time, my friend.
Absolutely. Thanks so much for having me on.
Take care, Wade. All right.
Take care, Jack. Bye.
Bye.